Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, August 3rd, 2014. We're going to take a look at a bunch of charts today, major indexes, try to get a feel for, are we in danger here? I'll be honest with you, some charts look kind of scary, others look like, no big deal. So we're going to take hopefully an unbiased look at the scary ones and the ones that look like no big deal. But before we do that, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Let's start with a scary-looking chart. Here's your Russell 2000. We're looking at the chart data all the way from 2009 until present. And you can see that if we go to that March low, the October 2011 low, the November 2012 low, and then extend that line on up, we are very near that line as I type this. Now, one thing to keep in mind is that being at a support line by itself does not mean scary things. As a matter of fact, in October of 2011, it meant good things. In November of 2012, it meant good things. But this has a little bit different look to it. Though I will say it was a little scary in 2012 because it looked like we may have been setting up a double top here and here. But now the chart has that toppy looking shape to it that I think we need to watch this really carefully. So keep an eye on the Russell 2000. We got a couple things going on here that look a little scary. Like I said, potential double top here with both of these moves over 1200. Also possible complex head and shoulders with a left shoulder double head and possibly a right shoulder. We don't know yet, but this is the line to watch. If this breaks and this breaks, then we would be looking at a minimum downside target measured off this pattern of about 970. And we haven't been down to 970 since the middle of the summer of 2013. So we would be erasing a year's worth of gains with that minimum move. But most frighteningly, if you will, we would break this long-term support line, which I don't think would be a good thing. It doesn't necessarily mean the wheels are completely off, but it means we have serious considerations to make, and it becomes more difficult for us to make a call as to whether or not we enter a continuation pattern or whether indeed we have seen the highs in the Russell. I'll remind you that we were looking at an inverted head and shoulders pattern back in 2011 and 2012, and that pattern had a target. That target, once we got over the neckline, was, drum roll please, 1200. So this target has been met. That means the people who thought I was crazy in 2013 saying look for the Russell to get to 1200, it doesn't mean I was right. It means the chart told the truth. So let's go and look at a couple other things. Here's your NASDAQ. NASDAQ doesn't look that scary. It just looks like we're entering a little sell-off, not anywhere close to our long-term support line. Not even that close to our intermediate term support line. No signs of a topping pattern because we've made a newer high. This looks like, so far, sort of a fairly run-of-the-mill pullback. But still got to watch this line and this line. If we start taking these guys out, then this could turn into a double top scenario, but that would not be confirmed until we got under 4,000. So frankly, that's a little difficult to think about right now, because 4,000 represents about an 8. I'm doing rough math in my head, about an 8% drop from where we are right now. So that's a little 7.5%. 8%. That's a little frightening to think that we wouldn't know that this was a top until that event took place. We could certainly begin to suspect it is if we break our blue line. Let's look at a couple Dow charts. The Dow Transportation Average doesn't look that bad. Again, it looks like we're just coming down to test support. And this support has been tested numerous times, and we've gotten a bounce every time. So this does not look particularly scary. Now, a lot of people look to the Transportation Average as being the leader of the pack. And if we get a good bounce on this, then it could be we're looking at a perfectly healthy little pullback. So, this is the line to watch with the Transportation Average. Let's look at the Dow Industrials. A little bit different situation here, because if we go with our long-term trend line that goes all the way back here, first off, nothing lines up that well within the Dow. Okay, so let's just ignore this extreme low in March and go with this low right here. Put that point there and line this up. So we have 1, 2, 3 touches, and we've got 1, 2, 3 touches here. This is more concerning to me than probably even the Russell. Even though we have a new high here, we don't have quite the clearer potential for a topping pattern. But what we have is an ascending wedge that looks like it may be in the process of breaking down. I would say that the Dow needs to recover pretty quickly, or we are in danger of significant market losses in the Dow. It is possible that we end up setting a less aggressive channel that could be something like this. But I would watch this like a hawk, because this is the chart. This and the Russell are the two that look the most concerning right now. Now, finally, let's go back to our S&P. You can see the S&P doesn't seem to really be giving off any strong signals of doom. We are still above this trend line, which has worked for more than a year and a half. We are well above this long-term trend line that has worked for more than 5 years, almost 5.5 years. This one looks to be, frankly, more in line with the Dow Transportation as far as health is concerned. But let's zoom in now and see what we're looking at on a shorter term. First off, we talked about this consolidation area between this purple line and this purple line here. And once we got back underneath this line, it became apparent that this was a head fake, but it was a head fake that served a purpose, because we had a target in the S&P of 1990 for quite a while. That did meet its target. But when we got back under this, You remember when we were over this line, it looked like we may be heading up to the 2020s based upon the height of this pattern. But when we came back underneath it, then we had to reevaluate and say, honestly, this could go either way. Obviously, it went down. When we measure the height of this pattern from here to here, put it on the breakdown area, you can see that our minimum target is almost exactly where we closed at 1925. What's also interesting is if we look at a 5-minute chart, we established, once we broke that line, we established a very clear support line. Okay, very clear. We also established a resistance line right here that we got over later in the day on Friday, but I think the more important short-term resistance line will be found right here. A parallel line to where we were, parallel to this bottom line, to where we were before this breakdown occurred, and also where we put the brakes on a couple times late on Friday. So you know what I'm going to say? I'm going to say if we get over this line at some point during this upcoming week, I believe that would likely represent the beginning of a potential reversal pattern. This could be it right here. It could be we come down and we make a little double bottom and then we come back. But if and when we do, even though this pattern has made its minimum target, I still think we've got to look at this line right here as being likely resistance. So guys, you know, that 2020 target, I've got to put that on hold down. I've got to say, you know, let's just see what happens. Let's see if we can power back up to back test this line. And if we can, does the market have what it takes to get back over this support line? The fact that our minimum target has been made means that is a possibility. But this still would likely be working as some form of resistance, not overcomable. Now, if we had only come down and made half of our target, then come back to this, I would have said expect strong resistance at this line. But when you've already made the expected minimum target, I don't think this broken line is quite as strongly flipped over to resistance had it been an incomplete target before that retest took place. So guys, there you have it. You'll also note that we bounced very near that line, at least bounced so far. I'm not saying this move is over, but you remember we were talking, 2-hour chart please, not 2-day. We were talking about this teal colored line as being the 40% retracement from the breakout of the right shoulder of this inverted head and shoulders pattern to the end of the breakout move, which I believe we said was right here, that breakout ended at about 1956. So this is that 40% retracement level. And with that in mind, it could be this is going to give us a little support here. We'll know early this week if we're going to reverse. I'm certainly hoping we do, because some of the other indexes that we looked at need some help. And I think if we could get a reversal out of the S&P, out of this what is now a 3-day downward channel. I know this broke on Thursday, but we were headed down all the way from that high that was put in on Wednesday the 29th. So guys, there you have it. That's your weekly review for the trading ending on August 1st, 2014. I know I went a bit longer than I normally do on this, but I think it was important for us to take a look at some other things. So let's see how the futures seem to maybe firm up this evening. Sometimes when we get some world situations that are a little awry, we can get some squirreliness in the chart that even at times can lead to what appears to be a breakdown that can fairly quickly recover. So let's just see what's on the world scene as Europe and Asia wakes up before we do. Thanks for watching. Take care.